Hey, what's going on, everybody? Christopher Jackson here, C Jack 130 on Instagram. Today, we're going to start a series called Entry Points. Okay, we're going to focus on different entry points from different setups and different strategies. And today, we're going to focus on demand zones. Okay, entry points for demand zone. Now, what is a demand zone? Okay, a demand zone is a location where there was plenty, or heavy buying action, price action in this particular zone in the past. Okay, remember, everything in the stock market is based off of historical data. So, in the past, there was strong buying power in this particular zone. Now, what I call a demand zone, I call a demand zone Big Mama's house. All right. The reason why I call it demand zone Big Mama's house, when I was younger, my grandmother had six boys and like three daughters. Right. And anytime any of the boys would get in trouble, they would always come back to Big Mama's house to get back into good health so they can go back into the real world. So when they came to Big Mama's house or Nana's house, Nana would make sure they had a nice cooked meal, had a nice place to warm bed to lay their head at night, had kerosene in the kerosene heater, had food to eat the next morning, prayed for them, said Bible verses to them, and just the whole thing what Nana was doing was building them up, gaining their strength so they can go back into the real world. So the demand zone is similar to the same thing almost, right? So when you come into that demand zone, the longer you're in that demand zone, the stronger the stock is getting, right? The stronger the stock is getting ready to explode out. That means the buyers are still in this demand zone and they're waiting for the opportunity to push the stock price out of that current demand zone, okay? So what I want to show you today is I want to show you how you can enter into particular plays in the demand zone, okay? High probability entries while your stock is in the demand zone. All right, let's jump into my screen. I'm gonna show you exactly how to do it.
Hey, let me stop you for a second. Listen, you see this sign back there that says Lowe's, okay? That says Lowe's. 2015, I worked right there at Lowe's making $10.35 an hour, okay? I'm stopping this video because I want you guys to understand something. You can get away from that, all right? You don't have to make 10.35 an hour. You don't have to just slave from job to job to job to job to job, hours to hours to hours to hours to hours. Listen, I have a 5-day mastermind coming up December the 4th through December the 8th. In this mastermind, I'm going to show you how to make additional income trading stock options while still working your full-time job. Now, I know that may sound crazy, but listen, you can actually make money while you're currently working your full-time job. Because what I always tell people is this: you don't want to just quit your full-time job. You want your full-time job to be your business partner, like Storm Leroy always says, okay? So December the 4th through December the 8th, I want you guys to join me for my 5-day mastermind. The link is in the description box below. If you want to learn how to trade stock options, learn how to make additional $2,000 to $10,000 a month trading stock options while still working your full-time job, click the link below in the description box, and I'm going to take you on this journey in the next 5-day mastermind, December 4th to December 8th. All praise to the Most High.
Everybody, so right here, I have my whiteboard right here, and on this whiteboard, I want to break something down to you. Okay, so I want to show you a demand zone. This is what a demand zone looks like a square, right? It can like a rectangle or a square. Okay, so say for example, this is a rectangle. Now, in this demand zone, I personally like to pinpoint three areas inside of a demand zone. Okay, the first area is the 50% mark. So I come right here and I say 50% of this demand zone is right here. Okay, so that's the 50% mark. All right, then we have the 100% mark right down here. See, it's kind of off a little bit, but it's okay. And then we have the 0% mark. That's right here at the top. Okay, so I call these the A location, B location, and C location. Okay, A location is down here, B location is right here, C location is right here. All right, these are the entry points with entry locations where you can potentially enter in the demand zone. So if I see a stock coming into the demand zone and price action is pushing that stock down, all right, when I see it gets down to this level, to the A level, once it gets to the A level, the next thing that I'm looking for what the price action is doing. What does this stock do when the stock price comes down to this level? Okay, first thing I'm looking for, does it consolidate in this area right here? Does it consolidate on this A location? If it consolidates on this A location for about a good 15, 20, 30 minutes, right? If I'm doing day trading or scalping or whatever, if it's consolidating right around here, that's showing me that we do have some buyers down here at the bottom of this demand zone. All right, this is the bottom of the demand zone. This is the top of the demand zone. So it's showing me that we have some buyers down here. The longer we're at the bottom of the demand zone, the higher probability that we're going to shoot up. Okay, that we're going to shoot up. All right. Now, second thing I'm looking for is this. I'm looking for to see if the stock pushes down here, and as soon as it hits this level A, it bounces off of A and starts shooting up. Okay, that's another sign that the buyers are still down here. Okay, still down there. Now, the third thing I'm looking for, if I'm looking for a call option, I'm looking to see the stock price or that particular stock just shoot through this level. Big boy, strong red candlestick, and it shoots through this level. Okay. Now, what I'm looking for in the 15-minute time frame, I'm looking for the stock to start to shoot back up, build back up, and start to form a bullish candlestick, a bullish hammer. And I want to see it come back across this A pattern right here, this A location, the bottom of the demand zone. When I see those three things, that's a potential entry point right there at the bottom of the demand zone, or A entry. Okay, I call it the A entry. Let's put it right here. What that is. Right here, we call it an A entry. Okay. So you can enter in at this level right here for your A entry and have you a nice stop loss down here. Okay. Have you a nice stop loss down there. Okay. Now, the next thing is this. You have the opportunity for a B entry. All right. Now, an A entry, what happens is if you enter right here, you're entering in at that A entry. You're looking to play this thing out of this demand zone. Okay. A B entry is when the stock goes up, goes up, goes up, goes up. It might stick its head above the demand zone, but then it falls back. Boom. It falls back like right around here to this 50% range. When it comes to this 50% range, you're looking for consolidation, or you're looking for a strong push off of this level. If we get consolidation, that tells us that we are now making a higher low when it starts to push back up. Okay, that's a potential entry point, high probability entry point at location B. At location B in the demand zone. Okay. And what it's starting to do is it's starting to create higher lows. And when it's creating higher lows, it's starting to create a nice trend line. Okay. So next thing is this, a C entry. A C entry, the stock goes up, comes up here. It makes a new high. Boom. Makes a new high, but then it falls back. Boom. Pushes back right around here. And then it stops right around the top of the demand zone. Location C. Okay. Location C. When it stops around this demand zone and it starts to consolidate, this tells you this stock is ready to take off. Okay. High probability setup. This stock is ready to take off. It has probably formed a nice trend line right around here, and it's ready to boom, 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 take off and go and make new highs. Okay. These are high probability entries out of a demand zone. Once you identify that, hey, we've came to this demand zone. Now the momentum is about to switch. We're about to start going in the upward trend for some time. You will start to identify these three entry points, A, B, and C. Most people will probably enter in on the B location, okay, which is not bad, all right? This is the thing about it. Entering in on the A location, you want to set a tight stop loss. Okay, because we've already broken through this A level, or we're already at the bottom of this demand zone. So if it breaks through this demand zone and hold, you don't want to get caught holding the bag. Okay, at a B location right here, you want to have a stop loss right around this A location, because if we go to this B location and fall down to this A location, it's a strong possibility that we're going to break through. But if we happen to bounce, you do want to have it a little bit lower than that A, okay, than that A location. All right. If we're at a C location, you want to have your stop loss somewhere around this B location, right underneath this B location. You do not want to get caught holding the bag all the way down here. That would be probably one of the worst things you can do, because now you're going to be down money when you don't have to be down money, or when you don't need to be down money. Okay? So A entry, B entry, C entry when it comes to trading out of a demand zone. All right? This is focus zone. I personally like to get in at the A location and take it up to the C location, take my profits and get out, and wait to see what happens when we pull back. Okay? And then do it over again, maybe at the B location with a tight stop loss. Okay? All right. So what I just showed you, everybody, I just showed you entry points out of a demand zone. Okay? Now, I like to focus on the 1 hour and the 4 hour demand zones. Okay? I love my 1 hour and 4 hour demand zones. That's why I put my heavy focus in it. And I start off focusing on the 1 year, 1 day supply zone. Demand zones. Then I go to the 4 hour demand zones, and I go to the 1 hour demand zone. And I first start focusing on the demand zone that's closest to the current stock price. What that does for me is that if that's a 1 hour demand zone, now I know my 1 hour demand zone. Then I look for my 4 hour demand zone, and so on and so on. Okay? So let me repeat that again, so you just make sure you understood what I said. So when I'm going through looking for my demand zones, I start off with the 1 hour, the 1 year, 1 day demand zone. Then I go to the 4 hour, and I go to the 1 hour demand zone. I find whichever demand zone is closest to the current stock price, and that's the demand zone I start focusing on when I'm trading. Okay. All right, everybody, listen. You guys have a good one. I'm gonna come back with another video. It's gonna be part 2. We'll talk about different entry points as well. Probably supply zones next. Okay, everybody, you have a good one. All praise to the Most High. I'll see y'all on the other side.